sir. Mic's on? It should be on, actually. The mic should all be live.
Thank you.
Just go.
It's on. Thank you, South Asia Agri Summit, and thank you, InStream panel here. I think this would be the biggest panel for today, and people from different walks of the trading business. Thank you, Vivek, for giving me and us the opportunity to come here for a wonderful event. And of course, Sri Lanka is an amazing place. What we are going to do is we're going to quickly run through numbers, and then we're going to start discussing the exciting stuff, which is how the market should behave, where do we see stock, and where do we see demand, where do we see supply coming from. Can we have the presentation, please? So we'll just skim through the numbers. As you can see that this is the last 5-year or coming 2025 situation with Canadian red lentils. These are, of course, StatsCan and StatPub numbers, so they are not my numbers, if anyone's thinking. These are authentic sources. So we in Canada this year, in September, we harvested a crop of about 1.7 million tons, and we will be exporting about 1.4 million tons. And next year, we are expecting the crop to little bit, the acreages to increase and the crop potential to be a little higher than the current year. This is the large green lentil situation. We had a production of 450,000 tons. We'll end up exporting about 370,000 tons of this product, and we're expecting very similar production for next year. This is the Canadian medium green lentils. These are called also richly type. And then we had the small green lentils, which is the Eastern type, predominantly going into North African countries and some into the Indian sub. This is the total lentil production. We had a total lentil production of about 2.43. We are seeing a decline of about 150,000 next year, give or take. It's too early because we have taken some yield knockoffs. If you look at the yield potential for next year, these are again 2025 are estimates, 2024 are real numbers. We will be exporting about 2 million tons out of Canada for the current marketing year, and we expect to have very low residue stocks. So if the one thing to note, and which is noteworthy, if you look at the last pretty much 4 years, the ending stocks have been anywhere from 200 to 400,000 tons, which is a minimum of the Canadian farmer will like to keep on hand going into the next year, because they always see old crop a hedge against any weather situations which might or might not come into the new crop. This is the US lentil production, not anything which has a very significant effect other than the richly lentils. Australia, that's where the biggest caveat is, and these numbers are again sources of different forums. We have seen in the past that Australia has been very inaccurate with some of their production numbers. So please take this number with whatever you guys know better about Australia. India lentil production, again, we're seeing a decline somewhat. That is corroborated by a lot of sources that there was a decrease in acreages and some of the yield potential. This is Turkey. So this slide, so we exported 500,000 tons of red lentils till November, and another about 100,000 tons in December. So out of the 1.35 million tons which Canada will be exporting, about 650,000 tons would be gone, has already left the country. We have exported about 180,000 tons of Canadian total green lentils. This include the Lairds and the Estons. The total lentil exports is about 900,000 till November, and you can take about 150,000 tons for December. This is the US richly situation. No surprises here. This is Australia. Till November, they didn't have an early harvest, so the export numbers have been quite low, which I think will catch up in December. Now, I would like to start this panel with Abhishek. Maybe you want to come in and give us some perspective of what you see in Canada and how the market has been for the last 5 months with the new crop, and what is your take with these numbers?
Hi. Thanks, Rabbi. Thank you, Vivek, Sudhakar, and the team for organizing this. The harvest was on time. We did not see much of weather shenanigans in Canada during when the harvest started. I would agree to the numbers that Rabbi presented of about almost 500,000 tons has been exported by now. In the next couple of months, let's say, I think by November it was 500,000 tons, and then you add December and Jan, yes, you're talking about roughly like 650K, of which India has a major share. This year, we have seen more of bulk vessels moving out because we saw a bit of logistical issues in Canada, which was uncalled for. We had seen port strikes, we saw some railway strikes as well, that caused a bit of delay. Values to the growers were roughly around, was hovering between 30 cents to let's say 35 cents, which is the current market, which is putting the math together roughly 660, 70 levels, give or take, which is where the spot Indian values are. So the replacement is almost the same from Canada. And the growers are selling on and off at these levels right now.
Thank you. Just a follow-up question on this. So how do you see, the major market was definitely India for the exports. So how do you see other countries, vis-a-vis Pakistan, Egypt, Turkey, and Dubai, what kind of import share or export share of Canadian lentils did they have? And do you see that those markets are fully fed right now?
I mean, apart from India, what we saw, so Bangladesh is more of a nipper type market, so they take as per the opportunity, and if the spread between the Aussie lentil and Canadian is, I would call it, let's say, over $30, then they would go for the cheaper version. Otherwise, they would want to stick with the nipper lentils. We didn't see them very active this season. Maybe a couple of holes, or like let's say 30,000-40,000 tons did go there. Even same is the case for Egypt as well. That is also kind of predominantly the smaller type lentil market. Turkey, to a surprise, was not so active. I mean, this year we've seen the number says it's roughly 150,000 tons gone there. Maybe, I mean, they have been lagging a bit behind because it's more of a re-export market, and they saw some cheaper lentils coming in from Kazakh and Russia as well. And they were also not seeing much of end produced demand from Iraq, which now has picked up in the last couple of weeks, and now we are seeing the fresh round of buying coming up from Turkey.
Thank you. Moving on to maybe Tanvir. How do you see the Canadian local landscape in terms of, the lentil production and the spreads between bulk and containers? And do you see the container market coming back to life on red lentils specifically?
Hi, thanks everybody. I think as far as the Canadian farmer is concerned, they are selling their product. It may go as bulk or bag or vessels or containers. It doesn't really matter to them. For the past few years, we've been seeing that the trend has been more towards bulk shipments, and we've noted that when the price disparity between bulk and container shipments is like $10, $15, $20 maybe, there would be the share of container shipment will increase. But when the disparity becomes more than $40, $50 somewhere there, the things will shift more towards bulk vessel shipments, which has been there in this case since the beginning of the crop year. And with the ocean freights increasing in the beginning of the crop year, the disparity has only increased. So the container shipments in red lentils possibly have been only the ones which were contracted as new crop shipments earlier in the year. So any contracts that were done after the crop came in would have been bulk shipments, specifically for India. For smaller destinations, container shipments may have happened, but majority of them have been bulk shipments. So as far as red lentils are concerned, the shipments will continue to be more of bulk shipments, not so much on containers.
Thank you, Tanvir. Moving on to Australia and Black Sea, Gaurav, if I may ask you to give your perspective about the Australian numbers. You know, last 3 years, Australia has surprised us, some in a good manner, some in not that good manner. So, what is your take on the Australia production numbers? Because we don't have any particular government source which is advising us of these numbers right now. And what are you seeing in Russia and Kazakhstan on the production side on red lentils?
So for starting from Australia, so this time is probably the first time that ABARES is quite accurate at 1.116 million tons of production. And it is a big revision that they did from their September report. So September they were talking about 1.5 when the trade came down to even 800, when there was dryness all across South Australia and parts of Victoria. So finally, we wrote about it in GPC also that they're not right, they're absolutely wrong. And I think this year they have learned their lessons. The agriculture department, the statistics department. 1.116 is accurate. For Australia, as you also pointed out in your presentation, that they will have higher ending stocks. So out of that 1.116, probably they will have to keep about 300 to 400,000 tons of lentils at the end of marketing year, which is like 25% of this year's production. For a country like Australia, which does not have domestic consumption, this is a huge number, which will definitely pressurize the prices in the local market and finally the international markets. So it's the same thing. So they will keep competing with other origins in the destination markets like South Asia. For Russia and Kazakhstan, surprisingly, that region is coming up big in pulses. First of all, Russia started with peas, big number, 4+ million metric tons. Chickpeas, Kabuli chickpeas, they grew big. Now it's a ton of lentils. So this year we expect that Kazakhstan will be producing about 250,000 tons of lentils. Mostly they are going to Turkey, and you will be surprised that out of crop of just 250,000, they loaded a Panamax for Turkey, for re-export. So, which is about 50,000 tons, 58,000 tons, I think. So that's a kind of cornering the market they have. Like few producers only have that kind of muscle power to load a Panamax. So which is relatively new to the region. And Turkey, as already pointed out by Abhishek also, Canada is facing competition in Turkey. Australia never had Turkey as a main destination, but Canada had. And now not just Turkey, it's not just Turkey, but the transshipment business, which is going to North Africa, which is going to Syria, which is going to Middle East, then all the Med region basically. So now that is being taken over. And if more farmers see this phenomena that we have a ready buyer just around the Black Sea and then to Med, then probably more lentils will be grown in Kazakhstan. Russia is, I'll say, is an enigma this year. The data is not available since the war started with Ukraine. The data is not being published publicly. But we expect their production to be about 340,000 tons this year, which is nearly 30% higher than last year. Their main market is again Turkey and then transshipment. So that business is running, but the data is unavailable completely. We expect that it is trickling slower because there's a bigger competition from Kazakhstan. So Russian lentils this season are facing bigger competition, mainly from Kazakhstan. And this transshipment business will most likely be taken out for Canada and Australia. Australia, it was never there, but even for Canada will face stiff competition in mid region, both for greens and as well as reds.
Thank you. So you're saying that Australia will not have a negative carry this year. So they
No, no,
will
I'm
not.
saying
They will
Australia
not
will have
export
to.
more than what they have.
No, no, I'm saying Australia will have carry from the last year. So they'll sell the last year once.
Yeah, thank you. Coming back to Abhishek on this, so do you think, Abhishek, that what Gaurav said, 300,000 carry, will the Australian farmer carry that kind of tonnage, or they will be desperate to offload that into the market?
I mean, this year the crop numbers of 1.1, 1.2 is majorly because the acreage was up, but this year they saw weather patterns changing, swinging, and especially that's why we saw yield losses, and that's where we had this number. And we are seeing a support today at whatever levels, let's say between 625, 630, and there is FOB levels I'm talking. The growers are like, not too desperate to sell. So at these levels, there is support over there in the market.
Good. I think maybe let's move on to the next big market on the production side is India. So I would like to bring maybe Ankush, you want to come in and advise if the numbers which we have seen on Indian production, what is your take on those numbers?
Hi everyone, good evening. Rabbi, so basically in terms of the production, it's early to predict the right number because we are still in the sowing phase. But looking at the sowing progress, it seems the sowing could be 3 to 5% lower, basis which we have projected the lesser number this year. But yields can be higher this year, basis the current weather situation. And the next 15 to 20 days are quite crucial in terms of the yield. And if the weather continues to be great, then probably we may end up with the last year production number or maybe slightly 2 to 3% lower than that. So in terms of production number, I would not challenge the number which you have presented. I think that's a fair number at this point in time. But this has definitely has a scope to improve over the period of time, which is another 20 days. And again, in terms of the consumption and the import projections which we have made, I think that's very quite closer to the actuals which I believe, because we believe that the consumption has improved over the past couple of years. And since pigeon pea is one of the closest substitute in some of the states, so that the prices of two pigeon peas dal was bit of the higher side. So it seems that the lentil consumption has increased. Secondly, there were some of the exports which was moving away from, as in out from India to Bangladesh. So that also eventually added up in the overall consumption. So consumption of lentil is increasing. This is what I believe. Secondly, the production is more or less stable. Import potential, last year Canada was lesser, Australia was higher. This year it is other way around, wherein Canada is higher, then Australia is having issues. So I don't think that it will be much of the change in the import numbers. So probably the numbers which you have presented is looking bang on at this point in time.
So a big question, just to follow up on that, Ankush. So getting into some territory where I think, which is the white elephant in the room, is there are a lot of stocks in India. The government of India is holding some of the stocks and the private players are holding X number of stock. The number is anywhere from, let's say the total number would be from 800 to 1 million tons combined, these two put together. And then we have another crop coming up, whatever the crop number would be. So from that perspective, don't you think that the market is right now oversupplied with lentils, at least for the short term?
So basically, I believe that let me split the entire quantity into two parts. One, the cargo which is available in the market to sell. And second, the cargoes with the government agencies. So approximately 0.5 to 0.6 million ton could be the cargo which is with the government agencies, and another 150K to 200K would be in the market to get free to the customer. So let's say if you look at the 200K as a marketable surplus which is there in the market, that's a 1 month demand. But this 0.6 million ton, that's the first time this is happening in lentils when the government is holding such a large stocks. And it's an apt time. Why I'm saying the apt time? Because government has to have some cargoes in their hand to control the adverse situations or to check on the adverse situation prices. Though we are in a good situation where we are expecting good crop in India exports, or imports coming up from the multiple countries. But we need to have some buffer stocks with the government, either this or being replaced with the new crop, right? So one beautiful thing about the current stocks with the government is that most of the stocks are the imported stocks. So they have an ample amount of space available to keep the new cargo as well. And this year, our Honorable Cabinet Minister have declared that they will procure not only limited cargo from the farmer, but 100%, and the farmer is free to sell 100% of the cargoes to the government at MSP. Primarily for three commodities, which is pigeon peas, black mat pea, and lentils. And at this point in time, the differential between the current market price of lentils versus the MSP is almost $120 per ton, and just significant price differential. So I believe it will be good to see that whether government comes into the picture and try to procure at least 500,000 ton of desi cargo. Then that 500,000 ton which they are procuring, they are holding today, that can be replaced with that. Which means that they can liquidate 500,000 ton which they have, and then which will be replaced by the government, the new desi cargo. So I think it's a good situation to be in, because this is what we have seen in the past, 2017, 2018, when similar exercise was done with chickpeas and mung beans as well. So chickpeas and mung beans, the government has played it beautifully and tried to make India as a self-sustainable for at least the period wherein it was not a very adverse weather situation. So unless we see a very, very adverse climatic situation, we were able to manage it. So likewise, I believe in case of lentils also, they are in a very good situation. So though overall number looks big as oversupply, but I believe it's a very good number to manage the entire lentil supply chain in India. And government is equipped because they have managed this in the past as well.
Thank you. Thanks for that elaborative answer. I was also looking at Singh Saab if he agrees with you. I think he has a nod there. Moving on to Binod. So India is such a big country. So there is a western side and there's the east side. How do you see the eastern corridor demand, India and the neighboring countries? Like, what are you seeing, the stock position, the demand situation in Nepal, Bangladesh, Calcutta, and the whole eastern corridor, if I can club them together? What is your take, and please help us understand that region better.
Eastern side of it, like Indian side, or say Nepal and Bangladesh, they will always be in the market because they're always paying extra premium compared to Western India. So the inflow will always be there, and the demand and supply will always be there. You see, you can compare the price of Mundra red lentil and you can compare the price of red lentil in Calcutta. There is always a premium. The main thing, it is very adjacent to Bihar, Nepal and Bangladesh. Now main factor is Bangladesh. Bangladesh is always suffering problem with the LCs. Now with the change of the government and caretaker government, LC become very difficult nowadays, and most of the importers are on back foot because they are not taking chances with the bank, because earlier bank used to give them extra limits, but now they are not giving extra limits. So and the exporters are also not taking extra risk in Bangladesh market. So inflow is there very few. So now they are depending upon the Indian supply side. Why Indian supply side? Because to India they can open small LCs like say 200 ton, 500 ton. So, and there are 3 or 4 borders. You see, if daily basis, if 500 ton is going to Bangladesh with the small borders, then you can see a huge chunk is going to Bangladesh. And these data are not available to data agencies. So that is the one of the reason that in Calcutta prices are always higher compared to western side. So there will always be demand.
So right now, do you think there is enough supply available for the demand? That's my first question. And second question, the premium in the eastern corridor exists because of demand or because of logistical inefficiencies compared to Mundra? So these are the 2 questions I would please like your answer on that.
Say first one again.
So the first one is, what is the supply and demand situation? There is enough demand, we all know. It's a very important part of consumption for global lentil balance sheet. So how is the supply and what kind of demand are you witnessing? The second question is, when you said there is always a premium, the premium is because of the demand in Eastern Corridor or because of logistical inefficiencies?
Eastern side eat a lot of red lentil. And supply is always short there. Because of the operational issue, the bulk vessel doesn't come here. So, and the container price is always higher than the bulk vessel. at current situation, there is a gap of $40 container and the bulk vessel prices. So with the container, you cannot fulfill the total demand of Nepal, Bangladesh, and eastern side of India. So always there will be little shortage compared to the western side. Like shortage of supply will be less and demand will be high. Or you can say demand will always be higher compared to supply. So that is the reason the prices is always higher in eastern side of India. And I can say that Calcutta Post is one of the worst port in India or say in the world, we can say. Operational issues are too much. Expenses are too much. And nobody want to bring the bulk vessel until and unless there is some, what we call this, they bring under some compulsion to Kolkata. Otherwise, nobody would like to bring bulk vessel to Kolkata. Like there is, you can save 5% wastage and extra expenses in Kolkata. So I would say people should not bring bulk vessel in Kolkata.
I hope Mamta Didi doesn't listen to you. Moving on to another, just keeping on red lentils, Rahul, I wanted to ask you, again, the similar question to what I asked Ankush. How do you see the Indian production numbers? And the second thing is, you follow prices very closely on the domestic side and on the import side. There is a big disparity between imports and what the MSP of the government is and what the desi prices are. How do you see this market behaving in the next 2 to 3 months, given the import stocks will keep on coming in and crop in India is coming?
Thank you, Mr. Rav, and thanks BSF for inviting me over here. Before saying anything, I'll start with one song that is रहा कर देशों में हमारा दाल बाजार हमारा कहीं डूबी कश्ती की कहीं ना मिला के नारा तो ये अभी हाल this is the present situation of pulses industry due to many factors which we have already discussed. Basically, market drives only on two factors. One is demand and another one is availability. If you check the availability of lentils, it is very good due to last year's production plus handsome amount of imports which we had. And the prices throughout the season, they were from last 2 to 3 years, they are very stable over here. And now what is happening, the import prices, they are higher than the domestic prices. This is mainly because due to the availability of the lentil. And this year, although the production area is less, but if you compare to last year, I think if weather remains good over here, so productivity may increase as compared to last year. And if everything goes well, we might have same production figures as compared to last year.
Then how is the market if we have a higher production, we have higher stocks on ground, we have import parity at lower. So how do you think this market will ultimately balance itself out? Reason being that we are entering into a significant supply glut in India.
The prices, I don't think so. There will not be any bullishness in the prices up to more than you are asking about 4 months. I think till 6 months it will be on the lower side. And prices will, now new crop will be coming in a couple of months. And prices will be much lower than the MSP, which is 6,700. So that opportunity can be used by the government to make their buffer stocks. And overall, if you say the prices, I don't think so. There might be any big bullishness, or I think they will trade in range bound. And when new crop will come, that might come down to by 100 or 200 rupees on the current level.
Thank you. Moving on to quickly on the green lentil side, maybe Sandeep, one of the prominent buyers for either Russia green lentils, Canadian green lentils, or US rich leaves was the India, because of Tamil Nadu and the tender, that was the biggest demand. So given what is happening with tour prices right now, and given elevated prices for green lentils, can the world still expect South India, especially Tamil Nadu, to still import 150,000 tons in a year of green lentils?
Good evening, everyone. As Ravji was mentioning, Tamil Nadu is one of the major buyers of green lentils in India. So for some of you who may not be aware, the Tamil Nadu government buys about 2.4 to 2.5 lakh tons of pulses every year for their PDS supplies. Majorly it's tur dal, which is preferred by the people of Tamil Nadu, and of course the government as well prefers to buy tur dal. But that said, the green lentils has been a very good alternative for the government in order to ensure that they have two products in order to compare and provide the product to the people at affordable prices. Obviously, it's part of the PDS scheme, right? So last year was excellent for green lentils as far as Tamil Nadu was concerned. More than 1.5 lakh tons was supplied to the government alone. And apart from that, many people may not know that there is also a market which is in Kerala, Tamil Nadu, and the south, which consume yellow lentils, which is the finished product of green lentils, regularly. So there is about, I would say, 30,000-40,000 tons a year, which is my personal number based on experience in the market, which would be consumed irrespective of the tender purchase. So coming back to the tender purchase, yes, the tur dal prices, which are currently putting pressure on the overall market, green lentil would be a challenge for sure. But then, considering the logistical delays and the issues and everything that we have faced in the last 4 to 6 months, looks like we got to plan 2 tenders in ahead if we want to go for green lentils, right?
You wanted to buy cheap, that's why you missed out. So partly you guys were to blame as well.
Yeah, I mean, yeah, it was a tough time, but I guess overall it played out well. But yes, so green lentils could be a challenge going forward for the next 6 months to 8 months. If there is a very good production in 25, I saw your production numbers, which are estimated, obviously. And US, the number put across for US richly is quite big. It's about 4.5 lakh tons. So if the production is going to be good, and if India is not buying for the next 6 months, definitely I would expect the prices to be better in terms of offers for the new crop. That would be another opportunity for green lentils to come back into the mix.
Just staying on green lentils, Tanvir, maybe, how do you see the Canadian farmers? The prices for green lentils are again at an all-time high in Canada, close to all-time highs. So do you see, the first part of the question is, do you see the Canadian farmer maybe going a little more aggressive on the seeding given the higher prices? Or you will see the prices come down given that there will be some lack of demand from the Indian subcontinent?
Hi. I feel, in the current year context, as the presentation suggested, of the production level is about 450,000 tons. The shipments from there till December or January may have been 200, 210, 20,000 tons odd from Canada. If you take some more product, maybe 225,000 tons odd may have been contracted, which means the farmer has sold effectively approximately half of his product. So the farmer is pretty well placed. Just three months after the harvest, they are pretty much sold half of the product. So I think they will hold off. They will not reduce prices.
1/3 of their product.
Half of the product.
Because their total is about 650, the exports were 200,000.
The exports you showed of 180,000 was Laird's only, right?
No, all green
All
lentils.
nuts, okay. So but in any case, I mean, when we've seen that the immediate rush of shipments gets done in November, December, there is a lull that is seen in the market always. So farmers want to hold product for that lull, and then they see whether the demand resurfaces or no. But one thing is there, unlike red lentils, green lentils farmers do not hold. If there is no demand, they will definitely want to sell towards the start of the third quarter of the production year, they will want to start to sell. Having said that, although India is not buying, there are other markets that are there for the traditional markets for the green lentils, the Algerian, Moroccan, that side, then the South Asian market, the South American market, the Central American market, all those markets, European market, they continue to buy, although the quantities are lesser than the Indian market, but then they do continue to buy, so that is a steady stream that continues. Having said that, so based on that situation, I don't think the farmers would reduce prices in a hurry there. Also, coming to for the next crop year, the prices are not at all-time high, but yeah, pretty close to all-time high. I think the production level will be maintained at least for a year, if not more. If they see that the prices continue to fall, then maybe the seeding may reduce, but not for the coming 1 or 2 years. I think the proceeding will remain there. The seeding levels will remain where they are.
Thank you. So, fortunately, unfortunately, Gaurav, this question is for you. Depends on how you look at the glass, half empty or half full. Indian policy affects global prices just because India is one of the largest consumer and producer of pulses. So we have this current zero tariff on lentils till 31st March 2025, and there is a differential in price between the domestic and the import side. So what's your take? Do you see this policy extending, or do you see this policy being restrictive? What's your take given, why I'm asking you is because on this panel you are a very neutral provider,
no
so there is no caveat and there's no hidden agenda.
Thank you for that. From proper numbers point of view, India will remain open. India needs lentil imports. India is not self-sufficient by far, and India will need imports of lentils. And rather than restricting, India has actually in the past year opened its doors for Russia as well. So Kazakh is still closed, but Russia is open. Many other origins were already open. So I think it will be extended. So there are two things. While balancing farmers, Indian government needs to procure at MSP, which will give support to the farmers. India is already offloading its 22, 23, 24 crops. Is already done that about 200,000 tons. The rest will also be offloaded within time. And so Indian government will create a new buffer which will support the farmers during harvest, but the imports are still a reality, will remain to be extended. So at 0% tariff or 10% tariff or 15% tariff, that is something which is to be looked at. But to our understanding, the imports will remain open, the trade will continue to flow, but there can be some tariffs.
So good news, Abhishek, for you, right?
Yeah.
Zero tariff.
Zero tariffs, yes.
A market which is going to function. So moving on to, I'll start with you. I think most of these people are here to understand how do you see price movements in the coming 5 to 6 months, and why do you see prices either going up or down given what your analogy is?
So, like I said earlier, Rabbi, so one of the reasons, from the grower's point, the values were, let's say, between 30 cents to 35 cents, which is 35 cents right now. But a major driving factor has been the fluctuation in the currency that we have seen. So after the election results, we saw CAD taking a hard hit as well, and prior to that something. So the currency movement has been almost like more than 6%, 7%. So that is almost $50 a ton. Keeping the currency where it is right now, which is CAD to USD like 1.44, whatever, and considering the rules that we have as of today of arrival of cargo by 31st of March, and it is extended, let's say, in hypothetical situation basis 0% duties, I don't think so the growers gonna be selling below that. Let's say if policy changes, I think the origin will adapt to that, and other destinations will follow? Because I mean, one thing we have to understand, like you said earlier, India is a white elephant in the lentils market, overall pulses as well, and especially in lentils. And yeah, major demand comes from here. So whatever price changes happens here, origin has to kind of adapt that smoothly.
So from the current dollar levels, which I would say around 660, 670, give or take, do you see any downside on these values, keeping the currency stable? I know there is a lot of currency turbulence which we are expecting from the next 2 weeks, but keeping that aside, where do you see these values panning out?
I mean, on the CNF front, yes, we have seen Turkey become active a bit. We have seen Dubai also active. Pakistan has been buying around these levels. So outside India, the markets are a bit active. India, like we said, private players has, let's say, stock of roughly, call it 200,000 tons between both the ports. So I don't see much of a downside here from the current levels, because Aussie is also being supported, considering where the currency is in Australia, because Aussie dollar saw a move of, let's say, 9% overall. So considering where it is, and we are seeing a support at 635, because the crop is almost, yield was down almost half from last year. So the growers, I don't think so gonna sell below that level, those levels. So the market's where it is. I see plus minus $20, but yeah, supported these levels.
It's a stable market.
Stable market.
Moving on to Ankush, what is your take? Are you going to be selling $600 Australian lentils?
Basically, in terms of the pricing, I believe the overall stocks in India are very limited at this point in time. And I don't expect the government to liquidate further before the MSP procurement, because in another 30 to 45 days, we are going to have a new crop available. So if government has a plan to procure at MSP, I don't think that they will first sell the cargo and then they'll procure the cargo. So from that perspective, I believe the market today, where the market is in India, which is about 57.50, equivalent to 660, 655 at the current currency level. And considering Australia doesn't have much of the crop this year, though we are talking about 1 million ton, but the actual question is how much is NIPA 1? It's not about only 1 million ton crop, it's about NIPA 1. So, and if NIPA 1 is 500,000 ton or 0.6 or 0.7 million ton, which is typically is being required in Eastern India, then Nepal, then Sri Lanka, and then Bangladesh is the main market. So I don't think that the Australian seller is so desperate to sell the cargo at cheaper prices. And Canadian farmer, despite of the currency volatility, the local prices are going up. As in, it has moved up from 32 cents to 35 cents. So I don't think, from the seller perspective, there's a desperation to sell. From a buyer perspective, there's a very limited cargo. So I don't see a reason for the prices to further go down. From the upside, could be another $20, $30 in dollar terms, and probably 2 to 3 rupees in INR terms. That's what I see.
So there's no divergence on, the MSP price, which is 67, and the port price hovering towards the MSP just to balance out the market.
So usually, let's say 67 is the MSP price. So when the new crop will come, what we have seen in the past is that the farmer tends to sell to the government when there's a 5 to 7 rupees differential with the MSP. Largely because of the delayed cash payments or the operational efficiency which farmer expects from the government side. But eventually when they have to procure a larger quantity, that must be improving, but it's not to yet at par today. So let's say if the MSP is 67, then I expect the market prices to be around 59 to 60, so that there will be a balance. So it's not a balance at 67. So the balancing price would be around 59 to 60. And considering the premium of Desi cargo versus the imported cargo, so normally Desi cargo trade at a 1 to 2 rupees premium over the imported cargo, which means like if the Desi cargo has to be sold at 60 to 61 rupees, which means the imported cargo has to trade at 58 rupees. When we talk about the differential between the two ports, it's largely because it's logistics. So Kolkata, which is the eastern port of Kakinada or Vizag, there if someone has to bring the Desi cargo to the eastern port, another 2 to 3 rupees, which is another $30 to $40 per ton. So effectively that spread will remain there. That spread between Mundra, as which is the western coast and the eastern coast, will be there. And since Australia is not a desperate seller this year, doesn't have 1.8 or 1.9 kind of million ton kind of a crop, so I don't see any pressure which can reduce or squeeze this gap between the west coast and the east coast. So this spread will either widen up or keeping the constant, but it will not reduce. This is what I believe.
Binod, what is your take? How do you see the market behaving in terms of pricing?
In dollar terms, I would say $700 plus minus $20.
So you're saying 700 plus minus $20 from current values are what, 660?
From current value, we won't say 660, current value is 675. Somebody might be very aggressive selling at 650, 660, but considering the market in load port, it should be 675. So we should consider the load port price, we should not consider any aggression price. There are people selling at lower rate, but we should not consider that because that may not last for long.
Thank you. Starting from there, what is your take, Rahul? We only have 10 minutes left. We have to open some questions.
Yes, as I told you earlier, I don't think so in domestic market prices are going to go up. Rather, when new crop will come, they might come down. So that's not a good thing for Indian farmers because on one side we are saying that we want to be self-sufficient in pulses. And on the other side, due to manufacturers we are importing, they are not getting prices. So ultimately, it depends upon this thing, market scenario, the prices, how prices will behave. Suppose the prices they gone down to MSP, then government will come into action and they will buy it from farmers. And in future, they are going to sell that stock also. So it depends upon manufacturers how the prices will move ahead.
Thank you. Gaurav?
So my take is slightly different on this. Prices for to move require some input, some impetus from outside. Large Australian crop or whatever the Australian crop is already factored in. Indian crop is already factored in. We have the demand numbers already factored in for this year. We need something fresh. The last nail in the coffin was Indian government selling its stocks. So which has already started, which led to another downfall. So which has already started. I don't think that in the next 3 to 4 months there is any new bearish factor. I'll come one by one. So what can be the bullish factors? India aggressively buying from its farmers and create a buffer which was never seen. Even when October 2023 they made a buffer of 650 or 700,000 tons, it was not imagined. They bought from the secondary market to such a tune, which was not imagined. I assume that if the prices remain depressed, as they are right now, Indian government procurement program will see a major success for lentils. Second, there will be acreage season for Canada, for Russia, for Kazakhstan, for Australia, Turkey. And if now the prices are depressed, so those acreage intentions will be low. I'm not talking about actual acreage. I'm talking about the intentions. That will be low. So once those low intentions are factored in, that can be one bullish factor. Indian government buying aggressively, that can be another factor. Third factor is the demand side. Indian pigeon pea crop is big, and that is now well known. The prices are showing it. We assume that it is about 4.25 million tons compared to last year of 2.85. So now that crop has already depressed the market. There is no new factor which is coming in. So people are assuming that the substitutability of lentils has gone down because tur is available or pigeon peas are available. That factor is already factored in. So there is no new bearish factor that I see for the next 3-4 months in the realm of lentils. Yes, there can be bullish factors. On the currency side, if you see Indian rupee versus dollar, yes, we are at an all-time low. But if you see versus Canadian dollar versus Australian dollar, there has been a significant appreciation last year in 2024. That has impacted the trade between these two nations. On the Trump presidency, there is a well-known say in the market, buy the rumor, sell the fact. In anticipation of Donald Trump becoming the president, the dollar has really moved up. The dollar index is now 110. Last time also when he became president in 2017, there was a big uprun before he became the president. After inauguration, it was a double downfall. Whatever was a rise, it actually fell fast. He is into trade wars, and trade wars are won by weaker currencies, not stronger currencies. If he moves in that direction, whatever we are talking about right now, the 10% depreciation of Australian dollar or Canadian dollar or rupee, they can evaporate very fast. So those are other factors. the realization of Australian farmers, Canadian farmers will be less, may get less if we see if history rhymes again. So I see that from here we are close to bottoms in lentils at the global level, and we may see upside in the next 3-4 months.
Thank you. Just one, I'll take Sandeep. To revive green lentil demand again against the falling tour prices, where do you see that green lentil prices need to be in India to revive that demand into the Tamil Nadu civil supplies?
Yeah, so currently, if you see the lights, they're going into the local market, so they're sold at about 94, 95 locally, which is about $1,070, $1,080 if you say the CIF prices. Obviously, at those prices, we would not be able to look at demand from the tender supply side. So in order to get back into the mix, I think anywhere around $900 would be an opportunity for lades or the medium greens, okay? Because small greens are not preferred here, easterns are not preferred here, so it would be the medium greens or the large greens. So anything around the $900 range could definitely spark some more interest.
So about 17, like $170, $180 correction to revive, to compete with the tour for Tamil Nadu supply.
For lades, yes. For Richly, maybe about 120 or 30, right? Maybe it's Richly's are at 1,020, 30 maybe now, so 120, 130.
Good, thank you. I think we have only 5 minutes left. Any questions from the audience? That's a good audience.
I have just a question for Sandeep, that this Russian lentils, how much the quality difference between Canadian lentils and what's the price difference? And what do you think that, is this Russian lentils can replace Canadian lentils? Because of the price factor and what quality you receive is acceptable in Chennai market, because I think a good quantity of cargo come from Russia. So I just want to know, because you already supplied this in Chennai tender.
Yes. So that's a great question, Vivekji. So last year there was a good quantity of Russian lentils which came in too, and this year the quality has definitely been not as much as good as last year. And what happens is we end up processing it and supplying it, right? So we are almost like an end user. So the yields matter. So the yields that we get from a Canadian green lentil or a US green lentil is definitely much higher than the Russian lentil, at least 4 or 5% more, if I may. So in terms of prices, definitely there would be a difference of $120 or $140 between these products. But due to the quality not being up to the mark, even the $100 or $120 price difference is not lucrative enough for you to buy it in volumes. Also, the Russian production this year has not been up to the mark, right? So they expected a north of, I think, 1.4 or 1.5 lakh tons, but looks like it's going to be less than 1 lakh tons, is what most of the trade experts are saying. So what that does is, they do have their own local markets where they can sell at a better price. So they would not want to sell it to India at much lower prices because end of the day, that's what matters, because we are competing against tur dal, right? So obviously with the current scenario of tur dal and even the production estimates that Gaurav was mentioning of north of 4 million tons for Desi tur, looks like it's not going to be easy for the next, I would say, 2 quarters at least.
So Russian lentils have not that great future as of now, what you're looking?
Yeah, at this point, yes. With this kind of quality, it's tough. If the quality is better, at least, it could be an opportunity there. But with this kind of quality, it's tough. Yeah.
One question to Ravai for you, that we have huge quantity of yellow peas and chickpeas and market depressed, and you are thinking that the lentil price will be remain same, except that there is a huge cargo from Australia, Canada, and in India also. So do you think that this price will be sustained because of after that, lot of availability of yellow peas, because yellow peas replace so many pulses and because of very cheap. So this is my thinking, that what do you think after that much pulses, if the red lentil price will be sustained this level, local or international both?
So, first of all, I didn't say the market will remain stable. It was the panelist. The beauty about lentil is it's just not India-centric product, right? It's a global product, global consumption, and consumption is going up. Look at Dubai, the amount of imports. Look at Turkey, the kind of consumption. Look at Bangladesh, Sri Lanka. The consumption is actually keeping up. And now for the last 2 years, due to the replacement of poor high prices with red lentils, the demand is there. Now, there are a lot of factors. One, Gaurav pointed out, see, next 2 weeks are going to be super turbulent. So making a price prediction right now, it's not going to work, because when Donald Trump comes into office, if he's saying what he's saying and he ends up doing it, there's going to be so much turbulence in the currency markets. There will be restructuring of trades. To give you an example, Canadian yellow peas used to go into China, right? And Russian yellow peas were not allowed. Now, once they opened the Russian allowed, the whole structure, the trade had to restructure. And China started buying more from this, so more Canadian peas started going to Bangladesh and vice versa and other things. So we will definitely see a lot of restructuring of trades in the coming 3 to 4 months, but we'll see a lot of turbulence going into the next 2 weeks. Now, depends which side of how the currency markets behave and where they end up stabilizing. I agree with Gaurav, there could be an overreaction at $110 index. But if he ends up putting tariffs on everyone and he signs those executive orders on day one, which he's saying, then 110 might be not something which is realistic. It might go to 112, 113. Now, what ends up happening is all the pricing which happens at the Canadian dollar level or the Australian dollar level or the Russian ruble, if the Russian ruble drops from 100 to 130, then the pricing increase which should happen in Russian ruble does not happen right away. It takes time. So you will see 2 months of a lot of lentils offers which nobody expected. So I think from a dollar market perspective, it's very turbulent. I don't think any pricing decision should be made before Jan 25th, just seeing what ends up happening. And after that, I think it will be clear as to what's going to happen and what's not, and that's when dollar pricing decisions should be made globally. Coming to India market, will the prices sustain? I definitely think India prices will sustain. The demand shift, once it happens, so a lot of tuor demand shifted to red lentils. And people are expecting now tuor is coming, tuor prices, and the demand is going to go back. We mill a lot of product, we supply into major finished goods into a lot of depots and a lot of centers. We expected when the yellow peas opened, there will be a significant demand shift from red lentil in the eastern corridor. It will means at one point it was 25% lentil demand, 75% yellow pea when the imports were allowed. And the demand moved to a lot of lentil because yellow peas were restricted and it was not there. We expected the demand shift to happen, but didn't happen. Right? It happened to a certain extent, but that lentil, we were expecting it to go down, the demand, it did not. On the contrary, it actually surprised everyone, and that's why Binod has been saying the demand has been very robust in the eastern corridor. So you have Ramzan coming up in March, right? Globally, the stocks which are on ground, either in Turkey or in Dubai or in India, they will be consumed in one form or the other. I don't think tuor will be able to replace a lot of red lentil shift, so the demand will be there. The good part is the demand will be there, there is a lot of supplies available. And after a certain point, compared on all the matrix of pricing of all the pulses, lentil other than yellow peas is still the cheapest dal available, right? So I see the markets from INR perspective, 57, 55, 56, very stable. If the government of India decides through NAFED and NCCF to aggressively offload, then you might see a 2-3 more rupee correction. But if they don't, and in the next 2 to 3 months, if they achieve their liquidation target and the market gets the product, I think it's a very stable market from an INR perspective. The big decision is what happens on 31st March 2025.
Okay, thank you.
Can I ask you a question?
Yeah, please. You could have asked me before we came here.
No. I wanted to ask, how do you look at a long-term perspective? Like, let's say a 5 to 7, 8 years horizon. How do you see the origination scenario? Like, originally for lentils, Canada was the main origination point. Most of the lentils around the world were supplied by Canada. Some part was Australia, but that was insignificant, 300,000-400,000 tons, and rest of it was Canada. Canada used to start supplying through the year, and around the Australian crop, the Canadian supplies used to come down, and Australian took over. And then after a couple of months, then again, Canadian product used to come into the markets. Slowly, Canadian production increased, Australian production increased, and then most of the time now, Australian supplies are more than Canadian in most of the markets. The third country origination point is Russia, or Russia and the neighboring countries in the mix, and they are steadily increasing. So how do you see their role increasing, and whether it will increase, or how do you see, like, in 5-10 years from now, how would the scenario look? Russia versus Australia versus Canada, how would that look? Given, as you said, in the yellow peas area, Canada used to be the place to go for yellow peas from Canada was almost 100%. As soon as the CFIA, the FITO arrangement was done with Russia, now more than half of the product yellow peas in China come from Russia, and slowly they are increasing their market share. So Canadian share is depleting. Do you see that kind of thing happening through lentils as well?
So I don't know what's going to happen in 10 years. If I know, I'll honestly not be here. I'll be on my private island. But I think do not underestimate the resilience of the Canadian farmer, right? If you go back in history, 30 years, Canadian farmers and Canada has been consistently growing lentils and similar lentils all around. Russia has come in and gone. Last time around, Russia came in was in 2015-16 when there were high prices, and Russian farmer came and planted some green lentil. They gave some competition in Algeria and North Africa, but they then disappeared for 6-7 years, right? Again, Australia has been facing a lot of droughts. El Nino now is changing to La Nina. So how that is going to happen? Last time around this weather shift happened, India had 2 back-to-back bumper crops. And Australia had significantly dry weather. But if I have to put 2 to 3 years is not something where any government or any supply shift to happen. It has to be consistently done over a longer period of time for any of those shifts to happen. I think the start has already happened. Last 2 years, Australia production was higher than Canada. Unfortunately, Canada had a very bad drought in the early 4 or 5 years back. So because of that, it took time. And then we, of course, had the Russia-Ukraine war, which shifted the wheat matrix. There was 6 sigma volatility at that point. So a lot of shift happened. Oilseed complex was also haywire. So I think the consistency of Canada, if you take last 30 years as example, I think Canada is not going anywhere for the next 10 years in terms of retaining back its leadership position and retaining back the biggest supplier of lentils. Now, of course, if weather patterns are moving drastically around the world, if there is a big weather anomaly and the weather patterns change drastically and it does not agronomically make sense for these products to be grown, then it's hard to answer that question. But if that is not the case, then I think in the next 2 to 3 years, you will see Canada back up to its full potential and again leading the market and the price from that perspective. Any other questions? Well, thank you for being a very nice audience. And thank you for the esteemed panel. Thanks for your time. Really appreciate your inputs. And I think hopefully to answer the last question Vivek had, we have seen desi chickpea prices and yellow prices. I think we have seen this picture in 2016-17. We forget all the good years when tuar prices went from $700 to $1350. Nobody talks about that. But when they dropped, everybody talks about. Industry is definitely going through some liquidity challenges, but that was bound to happen. This industry has been very robust for the past 20 odd years. We all will bounce back. It's just a matter of time. And the fittest will survive, and whoever is not fit, start running and get fit to survive. Thank you, everyone.
Thank you, Rav. That was a wonderful panel, full of information and, of course, strong opinions. May I request Rav to also give us one more, aid and help give mementos to your panels, starting from the extreme right-hand side. If you could just wait where you are, the panels come to you. First up is Rahul Chauhan of Igrain, India. Thank you, Rahul, for being on the panel. And if you could step towards the center and receive your memento from our moderator, Rav Kapoor. The next one, as you know, is already waiting in line. Gaurav Jain, AgPulse Analytica, India. Ladies and gentlemen, what happened to all those hands? Have they gone asleep? Sandeep, Gondi, Integrated Service Point, India, stepping up next. Come on, guys, this is the last round of applause for the day. I'm sure you can. Yeah. The next one, ladies and gentlemen, goes to WestAg Solutions Incorporated, Canada, Tanvir, Zaidi. From Viterra BV, Netherlands, Abhishek, Agarwal. Olam, India, Ankush, Jain. And Mamta Banerjee's friend, Binod, Agarwal. May I please request Dr. Mahmood Kader to please step up on stage, sir. The last and final recognition of the day goes to our very well done moderator who did a fantastic panel, CEO ETG Canada, Rav Kapoor. Ladies and gentlemen, can you give us a big photograph, proper photograph of the panel? Thank you very much, all together. And now, ladies and gentlemen, this is where you can really give them a big round of applause because it's been a great panel, although it's the last panel of the day. They kept the interest really high. With that, ladies and gentlemen, it's time to conclude the business session of South Asia Agri Forum Day 1. Just to remind you that we'll start again in the evening right here. We'll reconvene exactly at 7:30 for the evening's entertainment and, of course, the fellowship program. We have awards, dinner, reception, and entertainment. For those of you going to miss this evening, got to tell you, be with us tomorrow morning at 10 because that's when we start with business session 3. It's going to be moderated by the very well-known Manisha Gupta, and you know she's always on time. That is business session 5 on grains. Be here in the hall tomorrow morning at 10 in case you for some reason are not here with us this evening at 7:30 for the awards, dinner, reception and entertainment. With that, ladies and gentlemen, we come to a great grand end to the South Asia Agri Forum Day 1. Thank you. We'll see you again at 7:30 or at 10 in the morning. Thank you.